The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. I got John Womack back here from Iron Solutions to talk about what's happening in the world of values. John, how you doing, bud?
Doing well. It's a great day. It's Friday. Doing great.
It is Friday, and it's usually a pretty good day.
Yeah.
So spring guide came out. Going to have some impact what we see happening in the marketplace. But before we get to the guides, let's talk a little bit about what you see, your reflections of what's going on in the market. Probably the easiest one to start with. We always beat up on them on this show, it seems like, but it's combines. So when you're looking at the combine market, I actually believe that combines are unjustly getting beat up this time, and I'm the world's kicking the dead dog of combines. Is kind of a fun thing I do around here, but it feels like to me combines have kind of gotten a bad rap a little bit, I think, in this time, just because combines are combines.
Mm-hmm.
If you look at how combines now, the issue with combines, and it's different. I mean, you can pick a piece of equipment right now, and you can insert this piece of equipment here, but
right.
When I look at combines, the depreciation, auction value wise anyway, the depreciation that you're seeing from the price of a new one versus what they're advertised for, a 1-year-old or 2-year-old used one, and then what they're selling for at auction, there's a huge gap there.
Big gap.
but you can tell that same, you put insert row crop tractor there and you're going to see the same thing, right?
Correct. Yeah.
So as I look at combines, to me, if you look how they've depreciated, say from August of last year till where they're at now, it's almost a normal depreciation scale,
Right.
accounting for hours, and those kind of
Right.
things. You kind of look at those across the board. It feels like, a like-for-like combine. There hasn't been that much slip in the overall marketplace, but that's also me using a spreadsheet that I made. So take that with a grain of salt. So
Yeah.
what's your thoughts on that, John?
Well, I think when we saw like the really big slump with combines was 2 years ago, somewhere around there, 2.5 years ago. And that's when, when you want to talk about bottom dropping out of something, that's when the bottom just completely fell out of them. And it just happened so fast. And I think the reason why it happened so fast is because we never sold out of combines like we sold out of tractors or sprayers or really anything else.
Anything else?
And also too, like, we had dealers that were very hungry for them. So when you talk about allocation and everything like that, dealers took full allocation on them. And from what I was told, they were already sold. So I talked to somewhere around 30 to 35 dealers around that time frame, and every single one of them said allocation numbers are up. They've doubled. Some of them told me they doubled, and everything is already sold. And I was like, oh wow, okay. So that means things are going to get bad, and they did. When you look at how many S780s were sold on the auction block, and then you look at, what's in inventory right now, 1900, somewhere around in there. When you look at that, that right there is enough to put a damper on anybody's mood, right?
Sure.
And then you talk about 790s are not in the same hole as 780s are, but they're not good as well. 8250s, 9250s, same spot. Of course, there's more green equipment out there than there is red. But when you compare, market share, and everything like that back and forth, the percentages really bake out to pretty close to the same thing.
Yeah.
So which means they're both in the same boat.
Right.
But yeah, I think that what happened 2 years ago really soured a lot of people's moods, worse than they already were.
Right.
And then so that we just when you go back to the guide, we were pulling down those values because we saw the downturn coming, pulling down those values as much as we could could do in one guide, I guess you could say. You can't turn them down 20%, in one guide. But we were pulling them down, and we did that pretty aggressively for almost the first year. The first year. And then like what you were saying, after that, it was kind of a normal depreciation scale. So it was going back to, that 10 to 12% per year. And that's kind of how things were baking out. I have noticed a little bit more of a slip in the 23s, than the 22s and 21s. I think that's due to price increase. I don't necessarily know if the price increase is really holding up. But we saw historic highs in these price increases. I do believe that there is a trickle effect. But it's maybe a quarter of what the actual percentage of price increase actually was.
Right.
So when you're looking at a guide value like the way that we do, those numbers have to play well together. The 23s, the 22s, 21s, 20s, and so on. They have to play well together. And if you have big gaps in between, it doesn't make sense. The reporting will show you, the sold reporting will show you that it doesn't make sense. A lot of your auction data will show you that it doesn't make sense. Your advertised values will show you that it doesn't make sense. So, but what was really hard for us is that when you look at that humongous price increase in the 23s, to really get those values down to where they're relative to the 22s. And I suspected that the price increase wasn't going to hold up real big time, just because there was no difference. The majority of the time, there was no difference in the model from 22 to 23. It's just a year model. So what makes a farmer want to pay $100,000 between two combines, between a 22 and 23 model, if it's like ours? They're not going to do it.
Yeah. Makes sense.
No. So yeah, you got to put yourself in the farmer's shoes at some point as well.
Right. And then you also got to take a look at where price increases in combines, combine values are about oil and water. They don't really
Yeah, they
mix.
don't
I mean,
mix.
not very often does the, the correlation. I mean, 1-year-old combines, you see that because that's just how the 1-year-old structure works. They set it
Right.
up to be whatever. The price increases X. Oh, here we go. Next thing you know, bang, spits out. If you really dive into what those are actually selling for, and you go back and look at where the price increase was on the new one versus what the 1 or 2-year-old one looks like, rarely does it hold its water when it comes to the price increase, right?
Right. And it does. I mean, and it does. And I mean, they're going to depreciate just like the other one did, just like the other one did, just like the other one did.
Yep.
So I mean, when you look at, unless you have a new model, if you have a brand new model, that price increase will hold up a little bit.
Yeah.
I would say it might hold, other than a quarter, maybe a half, maybe a little bit more of that percentage, because it is a new model, and you'll have plenty of guys out there. I want that new model.
Right.
Or the neighbor got the new model, so I need this model. It's literally that simple. You know what I'm talking about.
Yeah.
So that will hold up, but yeah, I mean, if it's not a new model or anything like that, especially on a combine, tractors will hold up a little bit more. But especially on a combine, it's just not going to hold. It's just not going to hold that much. So when we saw the big price increases, when we were getting all this pricing information together from Deere and Case, New Holland, everybody else, and I started seeing these price increases and interim price increases, I was like, well, this is going to be interesting to see what holds up.
Yeah. Yeah. No, so I'm interested to, and what we're seeing now with the marketplace is that we're seeing that all of those 40+% price increases we saw from 2020 through 2023, basically, all that stuff's getting shipped away and slowly but surely coming back down from that, and which is bad. I mean, because the new equipment still, you're seeing price increases go on them that you're not seeing that pricing go backwards, and you're not going to. So don't hold your breath on that.
Well, I mean, even think about the gap in trade. So when farmer comes in, pays X, and then he comes and trades his equipment year or two down the road, and now the markets have just, I mean, in some instances plummeted. And then dealer says, hey, I got to offer you X. And then you look at the gap between their trade and their new, and that gap is just way bigger. And then then on top of that, you got 3 times the amount of interest on top of that. They just can't. A lot of farmers are just not going to do it, whether they can or can't. They're just not going to do it. Yep. And that's going to lead. We talk about inventory numbers and everything like that. I firmly believe that that's going to lead to more inventory stacking up, which means more inventory going to the auction block, which means bigger hits, probably. I mean, that's just going off of the auction data there, that they've continuously, the percentages have continuously gone down as far as what people are willing to pay. So, looking at all of that, I think that this is an issue that we're going to see for, quite some time in the future. I'm not a doomsday guy or anything like that. I'm about as positive gets, but I'm also a realist. And so you can look at inventory. That data is readily available, and you can see that, and you can just look at the trend as well. As long as dealers still have tons of inventory sitting on their lots, it's going to go to auction. It doesn't matter the year model, hours, whatever, because dealers don't want to pay to hold it, number one. And number two, at some point in time, that dealer's got to start paying principal as well. So that's a double whammy. And so they're going to, it's going to go to auction. It has to go to auction. And as long as it continues to do that, percentages, in my opinion, now the data could tell me something differently next month, but in my opinion, we're still going to see the downward trend. I mean, what have we seen in 8Rs since the beginning of the year? 10-15% auctions. Well, at least, auctions turning backwards on 8Rs. So and that's going to continue to happen, in my opinion, until something happens. it's going to have to something. One of the few leading indicators of all this happening is going to have to change.
Right.
And we'll see what goes from there.
Yeah. So I think back to the point you just made there, when you're looking at, so 8R tractors, the next thing I was going to talk to you about anyway. So good transition there, John. If you're looking at the 8R tractor marketplace and you're thinking about what that might look like, again, it goes back to even if the price of corn stayed up $7 or $8 or something like that, these prices would still be eroding away, right? I mean, because supply and demand caught up with each other, right?
Exactly.
That would have just happened, and the flood of equipment that we saw come in all at one time, basically, right? We saw it all happen at one time. So now the markets are the lots are back full again.
Yep.
With you name it, right? They got it all.
Yep.
You start walking through that as you looked at how the row crop tractor market started to fade. It wasn't the reason I think combines are in, and I'm sure people are going to tell me I'm crazy here, but I think the reason why combines are in such good shape, quote unquote, good shape, is simply because every used equipment manager has been trained since they first 30 seconds they were on the job that you got to manage your combine inventory, because if you don't, you will die. And that's just how it works. Yeah. So, they beat the combine wagon till it was, the wheels fell off of it. And but we never have a tractor problem ever in our careers. Have we ever had a tractor, which is nonsense, right? You go back to 2012 and go through all that. There was plenty of tractors going.
Exactly.
Plenty of tractors on going through auction blocks. I mean, it's not a big deal now. Not this volume that we see right now. I looked at some auction data the other day, and there was a couple sales where you saw 30 or 40 of these 8Rs on one sale, which and there wasn't a combine on that sale too. So that was a very odd situation.
Yeah, it's a weird situation. Yeah.
Yeah. So as you're walking through this and you start these things happen, I think the light's been shown on the 8R marketplace, the row crop tractor marketplace for a long time. People are just now realizing, or not realizing, it's not the right word, but are now taking account that we got a lot of row crop tractors. Probably should do something with these.
Yeah, I think that everyone's realized for quite some time that we have a lot of 8Rs and Magnums. But
I've been having that conversation for a year and a half, so it's not like this is this has happened last month.
I mean, it's the same thing. It's the same thing, Casey. How many moving irons did we sit around and talk about? Hey, one of these days in the very near future, this market's going to turn.
Right.
And boys, y'all better be ready. Yep. And I remember sitting there with used equipment managers saying, we better be ready. And they'll look at their buddy next to them, you better be ready, so on and so forth. And it's, I think a lot of guys were, but it's the old saying, easier said than done. I guess you can
100%.
Yep. And, you have to start turning your thoughts on trades so far ahead to really even consider not having a fast bleed, I guess, I guess you could say. And I think that's what happened because the market turned so fast.
Yeah, it did.
And a lot faster than what we've seen. But everyone's always said, well, it's an 8R, it's a Magnum, it's this, and we can sell those tractors, or we can get out from underneath those tractors. To your point, combines, a little bit of a different story, but tractor, everyone needs a tractor. We'll sell those tractors. But that's not really the case now.
Yep.
Because, do I believe that market's strong? The price of the machine is not. I still think that there's some demand there.
Oh, there's plenty of demand, but there's so many machines. That's the problem.
That's the other thing. But also too, in my opinion, when a farmer senses uncertainty, especially a good size one, they just hold. Yeah. Hey, we're just going to hold. We're just going to hold for a minute. We're not going to trade if we don't have to.
Right.
Unless we have a problem child in the fleet. There was a lot of updating. Let's not forget that. There was a lot of updating that went on the last 2 or 3 years. So a lot of guys are in a situation where they don't have to do anything.
Right.
They got their 3% interest rate.
Right.
I'm not going to go get an 8-9% interest rate. I'm not going to do that. So when you, and then also too, $4 corn, that's not even break even for some guys.
Right.
So when you roll all that into play, and you start thinking about all these uncertainties, a farmer's just going to sit down. The majority of them, not all of them, but the majority of them just going to sit down and say, pump the brakes. We'll just wait and see what happens. And I believe that that's what's going on in a lot of situations right now. But what does that lead to? Equipment stacking up because nobody's buying it. So I think that's another thing too that we really need to think about is just the uncertainties that are out there. There are certainties that are out there, but there's also a lot of uncertainties that's out there. No one knows really which way this is going to go. If I had a crystal ball, we could be sitting on the beach sipping Mai Tais talking about this right now. But we don't, and that's led into, a lot of the changes that we did with this guide, a lot of the changes that we have coming. When we're putting these guys together, I like to use the old shade tree mechanic routine. Don't change too many things at once, because if you do, then a lot of times you can end up back at square one because you change too many things at one time. So with this guy, I was just talking about 8Rs, taking 10-15% hits at the auction block. They've come down, excuse me, a little bit. So what we have done is that we have made an additional adjustment to our wholesale value for this guide. So there'll be an additional percentage on our 1 to 5 year olds that we will be deducting. So think about it. So think about it this way: if I'm going to pull back values on 8R tractors by 3%, let's just say that it's not going to be 3%. It's actually going to be more than that. But this is just an example. Then that wholesale value would actually depreciate an additional 3%. So it would actually go 6%. And so we're doing that for this guy to kind of get things back in order, I guess you could say. And then from there, those numbers will react the way that they normally have. But I mean, we have, in the 2-3 years ago, when we saw wholesale values getting closer to cash, we narrowed that gap. Now when we see wholesale or auction values getting further away from cash, what do we have to do? We have to widen that gap. That's just what you have to do. And then so we're doing that. And then from there, we're getting into, depreciating these machines. I would say the biggest movers right now is probably sprayers, 8Rs, 9Rs, Magnums, Steigers, all across the board, especially the late model stuff. We don't want to end up behind on those, because as far as a guide is concerned, if you end up behind it, you got to do a lot of times you got to do something drastic to catch up.
Sure.
And we don't want to do that. So we continue to depreciate those down. I believe you can pretty much focus on your late model stuff on 8Rs, 9Rs, Magnum, Steigers, somewhere around 5.5%. In some instances more than that. Trying to stay as relative as possible. I really believe that's where the market's going. Why? Because it's where the data is telling me that it's going. Our normalized sold reports, number one. Number two, auction data. You can see it. We were talking about, leading into this conversation, why did we adjust our wholesale value? Well, this is what auction's doing. You got to pay attention to all of that as well. And number three, and not in any particular order, but dealers. I mean, all you gotta do is pick up the phone and start calling these guys. They'll tell you all you need to know. And every single one of them all across basically the United States just telling you the same thing, chances are that's what's going on.
Yeah.
Which is nobody has a really good feeling about it.
Yeah.
And they're prepared and they're preparing for it.
Right. 100%. 100%. One thing that's kind of always plagued this industry, unlike the automotive industry or something like that, where it's the time from the time that you actually place the order and the time you actually get the piece of equipment.
Yep.
And sometimes it might be 30 days, sometimes it might be 9 months. Who knows how long it's going to be. For each piece, it's a little bit different. And the hard part about valuing used equipment, and you were talking about, making those adjustments is a slow turn. I think this is where most of the industry gets caught, right?
Mm-hmm.
You trade me in a combine, right? And I'm seeing, or I'll use a row crop tractor. I'm kind of seeing the writing on the wall that, hey, there's going to be a lot of supply here, and things are going to start catching up. So, as supply catches up with demand, price is going to change, right? You're looking at the machine you have, and I come back to you at, let's just say the average price out on the various websites are $300,000, right?
Mm-hmm.
I come back to you with $250,000, and you're looking at me like I'm ripping you off.
Right.
And actually, I can sit there and say, like, look, man, here's the situation, here's the thing, and all you see is that it's $50,000 less. Even when things do correct all the way back around, and you come back in the market and things have corrected back, and last time you bought a tractor, you traded for X, and now you're trying to trade for Y. It's the hill to overcome. That is the most spectacular, monumental, breathtaking peak of a mountain that you can ever get over, because it's so hard to convince someone that, look, I'm showing you the data here that says X, Y, and Z.
Mm-hmm.
It's an incredible feat to do that.
Oh yeah, I mean, well, everyone thinks that their tractor has gold bars in the frame rails.
Sure, yeah.
I mean,
They do.
everyone thinks that.
Right.
It doesn't matter. It doesn't matter how old it is. It doesn't matter how many hours
Right.
on it. It doesn't matter what color it is. They all think that. Well, I paid X. Well, here's the thing, and we learned this over the past couple of years with price increases. It doesn't matter what you paid new. It does not matter at all. It matters what the market is when you trade it.
Yeah. Yep.
You can make money, you can lose money. Either way, it depends on how well you bought it.
Right.
And that's when we were having these big price increases, a lot of dealers were calling me asking me, hey, which value should we be going with? Because you could order a tractor in February and it'd be one price. You order another one in August and the price difference is huge.
Right.
So dealers would call me and ask me, hey, what value are you going with when you're putting a guide number out there? And my response to that is that we go with the latest MSRP, or latest MDP, latest net, whatever you want to call it. But the reason why is because you have to do that. Why?
Right.
Because it doesn't matter what it was back then. It matters what it is now.
Yeah,
that tractor is worth that now.
Yeah, and I've had that conversation with a lot of people where, a used piece of equipment is a commodity, right? It's no different than, it's the same. You planted corn at $5, and now when you go harvest, it's worth $4. You don't get $5 for it, right?
Right. Yeah.
It's just one of those things. We don't want to depend on your contract and how your marketing went, but all the stuff that come into play with that, as you look, and that's why I think, in my opinion, that's why I think leasing has a play in all this stuff, right? Because you have there are some, lack of a better term, hedging opportunities with your piece of equipment you can do, because you're getting hey, this is what it's worth at the end type of thing. You can budget around that. Now, all that being said, there's a million reasons to do leasing and a million reasons to do finance, regular retail note financing. But when you look at the grand scheme of things, when you buy a piece of equipment, you need to have an idea, like, how many hours do you plan on putting on it? How often are you going to trade it? And what's that look like? And in my opinion of that is, those are all conversations you need to be having up front
Yeah.
with where whoever you're buying that piece of equipment. If you're buying it from a dealership, hey man, I'm looking at every 2 years trading my machine, or every 3 years, or every year, or whatever it is that you're doing. I plan on putting, X number of hours a year on it over the last 3 years. What's your depreciation scale look like? Now, the last 3 years, you can go back and start saying 23, 23. Oh, it was X. I don't even have that conversation with anybody. The conversation I'm having with people is, what's it look like between 17 and 20?
Right.
What's that depreciation look? Because we're kind of back into that marketplace, right?
I mean, that's gonna. The
numbers are bigger.
Yeah,
we're back in that marketplace.
Well, numbers are bigger, but when you saw, because okay, so let's talk about actually what the price increase actually was for a second. Okay, so let's be real about this. So when a piece of machinery is not depreciating, it's appreciating. Even if it's setting, I mean, say you got a $200,000 tractor and the market sets stagnant for 6 months on that $200,000 tractor, that tractor actually appreciated.
Sure,
Why?
It didn't move. Yeah.
Because it didn't depreciate.
Right.
So when we take that into account, along with the historic high price increases, what we see, 30, 35%?
At least, yeah.
I mean, 40,
Yeah.
I mean, in some instances, depending on the manufacturer. So, but also too, when you think about a used piece of equipment after it takes its first year of depreciation, first round depreciation, it's going to depreciate, depending on what it is, somewhere between 12 to 15% per year. Okay, so somewhere around in there. So we took 2 years of this to where machines were actually appreciating. So we were pushing the values of those up. They weren't just staying stagnant. So, but when you think about, even if they would just stayed stagnant, that's a 30% increase.
Yeah.
In 2 years. Okay. So you take that into account with a 30, 35, 40%, you're talking 70% max, just if they would have stayed still, but they didn't. Right. They actually rose in value somewhere around 15%. The used market did. So now we're at 85%. That's your max. So somewhere between 85% to 75%, somewhere around in there. And then when you think about what a normal price increase is, 5%, somewhere around in there, a normal price increase in a normal year, and you do that math, that will tell you how many years we jumped the price increase.
Oh,
so
we had 10 years worth of price increases in 3 years, man.
Easily. Yeah. And so when historic things happen like that, things have to correct themselves.
They have to correct, yeah.
But I mean, when they're done correcting themselves, then we're going to go back to a normal depreciation schedule, and I don't think that we're really too far away from doing that. The number, like you said, the numbers are just so much bigger. Everyone wants to talk about 12, 13, 14. We were dealing with $200,000 combines in. Now we're dealing with $6, $7, $8, $9 million combines.
1.9% financing too. That's the
exactly.
other side.
That's the other. Yeah. That's the other side. That's the other side too. Dealers weren't really. Dealers were worried about holding them, but they weren't as worried about holding them. And the reason why is because the interest rate. It didn't cost them. It didn't cost them as much money, so they could just kind of sit around and hold them. You didn't see You didn't see near as many machines going to the auction block back then. For other reasons too.
Right.
But a lot of it was it didn't cost dealers a whole lot of money to hold them. Now that the tables have turned. So that's really what's driving this whole thing. That's in the drive. That's 100% in the driver's seat. Also, too, when you talk about deliveries, we were just talking about that just a second ago. What has made all these machines go to the lot? Okay, so what made lots fill up? In my opinion, it is dealers are dealing with a double crop of trades due to delivery dates.
Sure, 100%.
So a dealer, when they're ordering things, and stuff like that, they're taking into account, so how much can I sell? How much can I roll through? Stuff like that. I'm not telling you anything you don't know. But, so ask anybody, what happens when that doubles?
Yeah, you think about how that cycle happened. So from basically the end of 2022 through the first quarter of 23, it's like everything, all the slack came out of the rubber band, man. Yeah. And everything showed up at one time.
Unraveled, man. Yeah.
And it all got there. And then it just, from that point forward, it just took off and ran.
Mm-hmm.
And that was the problem with the marketplace. I had this idea that there's going to be a kind of a slowly slow trickle back into the supply thing, because for the supply chain to go from absolutely can't get anything to I can get whatever I want, all within it seemed like a very short amount of time, didn't make a lot of sense to me, but that's what happened, right?
Mm-hmm.
And so
Yeah.
when you're looking at how those things play out, I really thought going into through 23 and into 24 about where we're at now, we'd be what we have now, right?
Mm-hmm.
Like this would be okay, cool. Everything's kind of back to normal. We saw the slow trickle. We're back to this big supply, but man, you start talking about like you said. I mean, there was guys that were they were ordering, planters, and I talked to multiple manufacturer dealerships where they would order a planter and they'd get it in 6 weeks.
Yeah.
You know what I mean?
Yeah.
They order it in June and they get it at the end of July.
Yeah.
And it was just like, what are you doing? Like, what am I supposed to do with it?
Well, I mean, you think about also too, like how that whole dynamic changing as fast as it is as far as ordering dates are. I was talking to a Case dealer, not too long ago, and he said he had a farmer come in wanted to buy a brand new Magnum from him, and he's like, I need it in 3 months, and he was like, good luck. But then he went and checked the board, and he was going to get it in a month and a half. This was I don't know. This is probably 6 months ago. But like, hey, I mean, things changed that quickly. As far as order dates, I mean, everything changed so fast. And I mean, I didn't necessarily think that things were going to turn over the way that they did, that we were going to rush the market the way they did. I felt like the manufacturers were going to possibly hold the reins back a little bit more. But I just think that there was so much pent up due to supply shortages and everything like that, sitting at the factories and whatnot. And there was so much pent up ordering and so on and so forth.
Too much cash too.
Too much cash laying out there is like, hey, we got to go get it, because we're not just going to let this stuff stay here and not go get it. So that's exactly what happened. But inadvertently, you kill your used market when you do that. But also too, let's face it, this is a cycle. We cycle in and cycle out of things every 7 or 8 years.
Some are just worse than others.
That's exactly right. And I mean, but with this one, what I'm paying attention to is like with every cycle, you have a historic this and historic that, right?
Sure.
So, but like with this one, you have historic, interest rates, so on and so forth. But also too, you have manufacturers that have actually halted manufacturing of equipment. I've never seen that happen before.
Yeah, that would be interesting to watch that play out and what that looks like, because we'll see those things kind of happen. Those transitions take place, but as you're looking at how the market's going to respond to that, to be honest with you, I think if every manufacturer tomorrow said, "Hey, we're just not going to make anything for the next 18 months," to be honest with you, I don't know that it'd have a big effect on the marketplace. There's just that much.
Yeah. I mean, I don't think it would. I don't think it would either. When I actually heard that news, I said maybe this will hold them up. 6 or 8 months down the road, maybe it'll keep them from going further. Yeah. But it's not going to hold anything right now.
Yeah, because one of the things you got to remember is that if I'm a new buyer and I'm rolling my stuff every year, I'm going to do the same practice with my used stuff.
That's exactly right.
So if I'm getting 10 machines from you, I'm giving you back 10 machines. So it's a 1-for-1 trade. Now, on the balance sheets and how all that stuff works out and those play out, I mean, yeah, you're for lack of a better term, you're moving paper and you're running those things back through, cycling down, but you're still rolling back into that second, third generation used buyer on the trade side, that they're still going to make the moves that they're going to make based around the cash that they have. The cash, available cash. And now we're starting to see programming on the new side that is, very low interest rates for a very long time on some of the stuff.
I mean, and, you also have, that's something we haven't talked about, dealers using funds, to really get down those interest rates. I mean, what I've said is that a mud guy is a mud guy is a mud guy.
Sure.
If he is a mud guy and he's turning, millions of dollars worth of equipment every year, he has to do that, and he has to continue to do that. Right. And then you have your B and your C guy, and then you got pluses and minuses and stuff like that in between there. But like your B and your C group, those will change hands, every now and then, but most of it is, especially with the high cost now, you'll have a B customer that'll actually pull down to a B minus or a C customer. And I think that's where where the cavity is, I guess you could say. It's kind of right there in the middle. These 1 and 2 year old trades don't have a ton of hours on them. They're still very expensive. Who do we move these to?
Right.
And I just don't think that you have your clientele there. Just because, like we were talking about before at the beginning of this, where you have, your spread between your trade and your new, or, your new to them tractor, or combine or sprayer or whatever is, the gap has just continuously grown, and some guys are just not going to pay it, whether they don't want to or they can't. And that's just the way that it is. So what are they going to do? They're going to continue to put more hours on their things, which means the dealership is probably going to get their business on the sales, on the service and parts side, which, I mean, let's be honest, that's what keeps the lights on anyways, right?
No, for sure.
So I do think that out of some of this, we might see a surge in parts and service, because guys are going to be hanging on their stuff a little bit more. When a guy would normally have something in warranty, now he might let it slip out of warranty for a year or so. So we might see a little bit more of that. But yeah, I mean, I just think I think everybody's holding their cards really close to the vest right now, and that's just, I think it's going to continue. I think it's going to continue that way. I mean, farmers read what's going on. They get on these websites and they look at what's going on. I mean, there's plenty of free information out there right now to make your own mind up of what's going on with the with the equipment industry. They know what's going on.
Yep. Yeah, and it's we're gonna continue to see things move. And I think that back to the guide thing, I think that's where the fluid nature of what you guys have done with these guides over the last 18 months have really, really stepped up. I mean, I use it every day almost, going through this stuff, and I've never seen it as tight as it is, where I didn't have to take 20% off or something like that to make it work. The numbers you guys are putting out are very in line with what's going on in the marketplace. So whatever you're doing, John, keep it up, buddy.
Yeah, I'm glad to I'm glad to hear that feedback. We're working pretty dang hard to get it as tight as we possibly can. But real quick, I do want to talk about some of the updates that we have coming in the fall guide as of right now.
Sure.
Things can always change.
Sure.
But for the first time, and I'm emphasize first time, we will have the brand new year model in the guide. So we will have the 2024 values in the fall guide. That is a full 3 months ahead of schedule of where we normally would be. They would normally be in the winter guide, which would be released on December 1st. This year, we're going to give them to everyone on September 1st, and then that will be the new standard. If that date changes, then that means that we're just going to give them to you faster. But September, talked to a lot of dealers, getting a lot of feedback about this. A lot of people in the industry. Everyone believes that that September 1st is a kind of a good one. We've talked about since you've got early order programs and stuff like that on sprayers that are happening in the summertime, possibly giving some sprayer pricing in the summertime. We've talked about all that. But for right now, we will be releasing everything on September 1st. Okay, so
Awesome.
so be looking for that. Also too, we're going to start doing actually next week. We're going to start doing some more analysis on our average hours. That's on all types, makes, models of equipment. So not necessarily like the hour adjustment, but the average hours that's on that piece of equipment. I talked to probably 5 or 6 other dealers about this already. We all agree that there are some edits that probably need to happen there. So we're going to do some analysis on it, and you will probably see an average usage or average hour adjustment in the fall guide. And then from there, once we do that, this is kind of getting down 6 months down the road now, but you got to plan ahead, I guess. Then we will be able to look at, okay, so are we adjusting these things the way that we should be adjusting them? So we've already made 2 edits to our usage adjustment. So the actual dollar amount that you're adjusting those machines, we've already made 2 of those. But if we need to make a 3rd one, we'll do it again. If we need to make a 4th one, we'll do it again. The thing is that the number of adjustments that we have to make, it doesn't bother me. I just want to be as close as we possibly can. I want to keep these numbers as tight as we possibly can. And if we have to continue to adjust, if we gotta do historic things with the guide, there's historic things that are going on. So why not do historic things with the guide? If that's what we got to do, that's what we're going to do. We're here to provide a service to our clients, to our partners. I call them partners in crime. And they depend on us to make these very heavy decisions. And whatever we have to do to be able to provide the best thing that we can, that's exactly what we're going to do. Other than putting new guide numbers out monthly, I haven't quite figured that one out yet. But never say never, I guess.
Right. Well, John, appreciate you coming on the podcast, man. Probably a good place to stop there. Folks want to reach out to you. What's the easiest way to get a hold of you?
I can start with an email. My email is John, Jon, last name Womack, WOMMACK, @RandallRiley.com. Start there. And like I said, I'll always probably end up in a phone call. I like to talk if y'all haven't figured that out yet. I like to talk a little bit. But always interested in hearing feedback on our products. Where can we be better? And just real quick, Casey, sorry, I forgot to talk about this.
No problem.
So with every guide, we put out, the marketing department puts out just a little email. It's called the Use News. So inside of there, we talk about, where I was talking about the wholesale value change. It talks about that. Also inside of there, it will talk about some option changes and stuff like that we've made. So like the latest one is a See and Spray. So the option description for these late model John Deere sprayers just said See and Spray. That's all it said. Well, got a lot of feedback from our clients saying, hey, that's a little bit misleading. So what did we do? So we went in there and we edited that to say See and Spray Ultimate with Exact Apply. Because if you have See and Spray, you have Exact Apply. Unless you have the puck. So unless you have See and Spray Premium. But that's the reason for the ultimate there. So
right.
So just making those things clear, and we welcome that. We try to turn these things around as fast as we possibly can. Inside that Use News piece, it'll give you details on all the other changes that we've made. There's quite a few of them. But we're always doing that. We're always taking feedback, and we're always trying to mold this guide the best way that we possibly can through client feedback. So that's another piece there. I welcome anyone to reach out to me. If you see something that doesn't look quite right, if you'd just like to have some more information, if you'd like to see a change or something like that, please let me know. We will handle that, very quickly, for you. It's not something that's going to take months and months and months or anything like that. No. It will be taken care of very quickly. And most of the time I will end up giving you a call after it's put in the guide. Hey, do you see it? Does it look right? Awesome. Let's keep going. But yes, I'll say it again. Email address, JON, WOMMACK @RandallRiley.com. Would love to talk to y'all.
Right on. John, appreciate you being on the podcast, man.
Thank you, Casey. Have a good one.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version of the YouTube channel, which is the Moving Iron Podcast YouTube channel, and go to movingironllc.com for everything Moving Iron related. So with that, I'm Casey Seymour with John Womack. Let's go with Iron, folks. Out.
Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century.